Welcome to the first question clip for FRK 111. We're going to be dealing with a question from your question book if you want to get that to follow. The question that we're going to be dealing with is from chapter 2, and it is the question for Ria Redhead. When we start with a question, we always tend to read the required part so that we get a framework for answering the question. So if we have a look at the required part, we're going to use the table below to show the effect of the transactions of hairdos on the accounting equation, test the correctness of the application of the principle of double entry. This principle of double entry, if you can recall, there we need to see a debit for every credit, and we're going to do this test for correctness after every transaction as well as right at the end of the question. So once you're ready with your framework that is provided at the bottom, assets equal to equity plus liabilities with their increases and decreases, we can start reading through the question and answering. They tell us that Ria Redhead had just qualified as hairdresser and started her own salon, Hairdos. Always remember to determine which entities books we are doing, and this is not the books of Ria Redhead in a personal capacity, but this will be the books of Hairdos. That is the entity that you need to focus on. The following transactions took place. In the first instance, Redhead paid 20,000 Rand of her savings into Hairdos' bank account. Determine from the entity's point of view, from Hairdos' point of view, whether we need to influence the assets, the equity, or the liabilities. If you think about a payment into a bank account, the bank account will be classified as an asset, and a payment into the account will lead to an increase in assets. So the 20,000 Rand increase in assets will have to be entered in the column for increases in assets. Now, according to the duality concept, for every debit we need a corresponding credit. Because this was Ria Redhead that paid it into Hairdos, that has to do with the owner. Everything regarding the owner is accounted for under equity. Remember, liabilities for foreign funds made available, equity for owners' funds. So that 20,000 Rand is an input into the entity, which will result in an increase in equity. After our transaction, we can determine whether our basic accounting equation is in balance. Positive 20,000 Rand is equal to positive 20,000 Rand. First transaction handled. In number 2, they mention that we borrowed 30,000 Rand from Redhead's father. He transferred it electronically to the bank account of Hairdos, and this loan, as well as the interest on the loan at the market-related rate of 8% per annum, will be paid by Hairdos. Redhead's father is a foreign entity, not the owner of Hairdos, but a third party. So if a third party provided the funds, we need to determine, do we owe this entity, Redhead's father, do we owe that person more or less? In this instance, we owe that person 30,000 Rand more. Our liabilities will increase with 30,000 Rand. And he made an electronic transfer into the bank account of the business. The bank account of the business will be classified as an asset, and we have an increase in assets of 30,000 Rand. They mention interest, but the interest rate and the interest payment that they mention here will only be dealt with in a later transaction when we actually incur the expense, when we're supposed to pay the interest. Third transaction. We paid rent for the month by check, 3,000 Rand. A check is as good as cash. It's one of those vouchers that anyone can go to a bank and exchange it for cash. So if we paid the rent with a check, our money in the bank decreases. So under assets, we'll have to look at a decrease of 3,000 Rand. And again, our duality principle, for every credit, we need a corresponding debit. A rent does not mean that you own the asset necessarily, so this will not result in an increase in assets because we don't have all the risks and responsibilities related to this asset. It's a mere expense that we're paying. Now, expenses will influence our profit or loss. Profit or loss belongs to the owner because of their contribution. You remember Ria Redhead made a contribution over there. So this will lead to a decrease in profits if you pay an expense. Decrease in profits, a decrease in equities on the debit side. So that 3,000 Rand will result in a decrease in equity. Think in terms of the expense, what the influence is on equity, on the profit. Although the expense increases, that will result in a decrease in profits. Number 4, we purchased equipment for the salon from salon suppliers for 18,000 Rand. The amount is payable in 3 equal monthly installments. The first installment is due at the end of the month. Purchasing equipment will result in an increase in assets. So this 18,000 Rand is to the benefit of the entity to be applied to generate income. So we're going to increase our assets with 18,000. Now we didn't pay for it, but we will be paying it in annual installments. So it cannot be a decrease in my funds because I have not paid yet. It has nothing to do with the owner at this stage. So we're going to have to go to liabilities. Do we owe this third party more or less? And we increase our liability with 18,000 Rand. Wonderful. We're at number 5 already. Redhead brought a desk, chair and filing cabinet from her home to be used in the entity. Its value amounted to 2,600. Now Redhead, if you refer to the first transaction, she was the owner of this entity. So if the owner enters into an activity, we'll have to have a look at the equity element of this basic accounting equation. So Redhead brought the desk, chair and filing cabinet. That means that she added to the business to the value of 2,600 Rand. 2,600 Rand increase in equity. What was added to the entity? That was a desk, chair and filing cabinet, which can be classified as assets. So we have another increase in our assets of 2,600 Rand. For number 6, appointed an assistant at a salary of 1,800 Rand per month. They do not mention that we've paid this assistant or that the assistant had done anything to earn this salary. So the appointment of the assistant, the 1,800 Rand per month, does not result in a flow of economic benefits. So at this point, for number 6, there will be no influence on the basic accounting equation. Remember, you need to adhere to the rules of the accrual concept, and in the accrual concept, we need to account for expenses incurred and income earned. No expense has been incurred for transaction number 6. Transaction number 7. We bought hairstyling products for use in the entity for 4,200 on credit from Haircare. On credit eliminates assets as an option, so we can automatically go to our liabilities section. We owe this entity 4,200 Rand, so we can increase our liabilities with 4,200 Rand. And now we need to decide, what will this hairstyling products be classified as? Will it be an asset, so future benefits included in there, or will it be an expense, something that you consume right away? You have 2 options for these transactions. I'm only going to go with the one option where management decided they will be consuming all of this consumable goods in this financial period, therefore expensing it as an expense under equity, and expenses will result in a decrease in profits. So we're going to put this 4,200 as an expense under equity. We will deal with the other option later. Then we get to the transaction number 8, received 2,300 Rand from customers for services rendered. Receiving money will increase our assets, so the 2,300 Rand will increase our assets. And this is for services rendered. Service fees that you've earned will increase profits, and profits will be accounted for under equity. So this 2,300 Rand increases our equity, resulting in an increase in profits. Transaction on the 9th, received an invoice from Aquila IT Services for the following items purchased. We purchased a computer system for 7,000 Rand and installation cost of 500 Rand. They just mentioned the receipt of an invoice. No mention was made of payment of the invoice. Therefore, if we've purchased the equipment without any payment, we're still liable to pay this money over to the third party. Liabilities will therefore increase, and the equipment will be classified as an asset, which will increase our assets. The question now is the installation cost of 500 Rand. Will this installation cost be treated as a separate item, or will it be capitalized, in other words, included in the cost price of the assets? If the computer system was not installed, it cannot generate economic benefits for the entity. Therefore, the 500 Rand will be added to the 7,000 Rand, the cost of the computer system, and the assets will increase with 7,500 Rand, resulting in an increase in liabilities to the same value. Transaction number 10, we paid interest on the loan for 1 month to Redhead's father. If you can recall transaction number 2, where we borrowed the 30,000 Rand, resulting in an increase in liabilities. This interest on the loan is now not a repayment of the installment of the loan, but for the use of Ria Redhead's father's money, she will have to give him economic benefits in return. This interest is paid for 1 month only, therefore we have to make a calculation, starting with the 30,000 Rand that we borrowed from Redhead's father in transaction number 2 at the interest rate, which is 8%. Because this is an annual rate, we have to now calculate for only 1 month of interest. This will give us 200 Rand interest on the loan. If we pay this interest, our money in the bank will decrease, so we're going to decrease our assets with the 200 Rand. And again, this will not influence the outstanding balance to the father, but it will be an economic benefit that will decrease our profits. And profits will be accounted for under equity, so that 200 Rand will decrease equity on the debit side. Transaction number 11, paid the first installment to Salon Suppliers by check, and they tell you to refer to number 4 above. In number 4, we purchased the equipment on credit, and they tell you in number 4 that the amount was payable in 3 equal monthly installments. If we then take the 18,000 Rand in total, divided by 3 to get to our monthly installment, that will be to the value of 6,000 Rand. In transaction number 4, we increased the liability, and now they tell us we paid the installment. Different from the interest here, this is the installment, resulting in a decrease in liabilities of 6,000 Rand. And we will settle this with money, so our assets will decrease with 6,000 Rand. Transaction number 12. Issued a check of 800 Rand to the City Council to pay the water and electricity account. A check is as good as money, so we're going to again decrease our assets with 800 Rand. And the water and electricity is a benefit that you've already consumed. The more water and electricity you use, the smaller your profit will be, and profits will be under equity. Therefore, this expense will decrease my equity with 800 Rand. Paid the monthly salary of the assistant by check. You'll remember in transaction number 6, we had no entry for the appointment of the assistant, but now that assistant has performed from her side, and we can pay her a salary of 1,800 Rand per month. If we make a payment, our assets will decrease, and this salary will decrease profits. The more employees, the smaller your profit under equity. If we refer back to the required part, test the correctness of the application of the principle of double entry. For every debit, we need a credit, And our basic accounting equation must be in balance. If we add up all of these totals for all of these columns, we can test whether the duality concept has been adhered to. So for assets, it will add up to 80,400. On the negative side, 11,800. And we're going to continue with this, adding up. If we then calculate the net effect for assets, I take all my positives minus the negative entries, and that will result in assets adding up to 68,600 Rand. And this must then be equal to my equities net amount plus my liabilities. For equity, I will have 14,900. If I took the positives minus the negatives, and for liabilities, 53,700. And the two amounts on the credit side's increase will be equal to the assets of 68,600. Thank you for your participation in this question, and we look forward to seeing you again in the next question clip.